The S&P 500 daily cloud chart shows the bottom of the cloud 26 bars back at 4368.40 now. And the initial jobless claims just dropped and came in light, meaning fewer people seeking unemployment benefits. It was 198,000 and they expected 210, so that's quite light, and the market is reacting as good news is good news, 43.19. So the daily baseline is in line with the bottom of the cloud, so that's pretty good resistance right there, 4364.22 for the baseline. And the relative retracement disqualified up one level is at 4365.67, so right along there too, and that's pretty good resistance. And the Bollinger Band upper band is near the baseline, right above it at 4374.39, and price in the pre-market hours is between the 21 EMA in solid blue at that level, 43.45.36, and the 20 simple moving average, 43.14.06, and R1 is at 43.24.60, so right in between those two moving averages. And the pitchfork level 2 right there in the middle of the Andrews pitchfork for today is at 43.28.33, so that should be pretty good resistance, along with the line 43.25.28, demarking the no man's land from the lower region. And here's what that looks like. Still a lot of moving averages in no man's land. It fell out of no man's land yesterday, so it needs to get back up there and probably have an event that makes it look like this in the opposite direction. It just slid right through the no man's land into the lower region. It needs to blast through the no man's land back into the upper region somehow. And the old adage, S&P price takes the stairs up and the elevator down. And the weekly 2018 broadening top in dashed red right there is at 43.23.47 for this week. So a lot of resistance right before the no man's land. And meanwhile, back in no man's land, and right below that demarcation line for the no man's land coming out of the lower region is the 4305.31 line here. And the daily conversion line is at 4306.56. So pretty good support there, you would think. And the pre-market hours pivot point is at 4309.30. And again, that 20 simple moving average right there in solid blue is at 4314.06. A lot of support again to the downside and pretty good resistance to the upside, and really no reason to blast off. And the fast trigger ATM down really had a hook downwards. It did not make it below the overbought line, but it's inevitable that it will. And the slow trigger, hence the name slow, is slowly planing out sideways, so I fully expect the fast trigger to cross under the slow trigger and head back down to oversold and below and meet the pressure up line down here. The Shande momentum indicators still manage to stay positive, but nothing like the previous two bars. That was pretty good there. And REI is racing down to get below the oversold -40 line. DM1 and ROC are holding their own in between the oversold and overbought here, but I think it's inevitable for them to test the oversold region. So if all three of these go under their oversold line and DMI plus is already below minus, then yeah, we're probably going to revisit this eventually here, this consolidation zone down here. So we're in a consolidation zone up here, and my thoughts and what from where I sit looks like this needs a retest at least down here before we head up.